So this stock hit my profit target today. So let us discuss why I bought this stock. Where exactly did I plan to buy the stock? Where did I actually buy the stock? Where did I keep my stop loss? And where was my target? So as usual, this is KFin Tech. This is a daily time frame chart. I only look at the daily time frame. I don't look at other time frames except for trade execution. I go to the 15-minute chart. That's the only time I'm going there. Otherwise, my trade is fully on the daily time frame chart. So as you can see here, the blue line is above the green line and the green line is above the red line. So the 50-day moving average, 150-day moving average, and 200-day moving average. The blue, the green, and the red. This is the criteria I use. The blue should be above the green and the green should be above the red. That's an uptrending stock. The orange line is the 8-day exponential moving average, and the purple line is the 21-day exponential moving average. I use these two moving averages to manage the trade. Now, as you can see here, the stock starts to go up, and from here, it begins to form a base. So my plan was to buy the stock as it is coming out of the base. So let us see how many contractions this base has. So let me explain what I mean by that. So the base starts from here. So this is point 1, the highest point in the base. This is point 2, the lowest point in the base after point 1. This is point 3, the highest point in the base after point 2. And this is point 4, the lowest point in the base after point 3. And I actually bought the stock on this particular day. This is 26th of April. Okay. So in this base, as you can see, the stock has gone through two contractions from here and then from here. Okay. So I drew a line at the high of this candle and I was waiting for a breakout of that high, which happened on 26th of April. So let us draw a line at the high of this candle. That becomes the price where I plan to buy the stock. That is not necessarily where my order will get filled. Okay, that depends on how I execute the trade. So let me draw a line there. Okay, so let's draw a line at the high of this candle. What's the high of this candle? 673.75. So 673.75, and let me give it yellow color. Okay, so this is where I plan to buy the stock. Now on 26th April, the stock hit that yellow line. So I got a notification on my mobile phone because I had set a price alert here. So the moment it hit the yellow line, I got the notification. So I immediately went to the 15-minute chart to execute the trade. So on 15-minute chart, let us go to 26th of April. So here, if you see 26th April, this is the first candle, this is the second candle, and this is the third candle. So this closes above the yellow line, as you can see here. But if you notice, almost 90% of the candle is below the yellow line. So since it is closing above the yellow line, I took a decision to buy. And since 90% of the body or height of the candle is below the yellow line, I decided to take half position. Half position means 3.25%, because generally I take 6.25, 6.5% is my normal position. So I invested 3.25% of my portfolio in this stock at the close of this candle. And I have some notes here. My order got filled at 674.75. So the moment this candle closed, I put a market order. So my order got filled at 674.75. So which is very, very near the yellow line. So that is what I am planning to do. If not the yellow line, at least very close to the yellow line. So let us go back to the daily chart. This is how it looks like. So on this day, on 26th of April, The blue line, this is 674.75. That is where I actually got filled. And my stop loss I kept at 8%. So let us draw the stop loss. My stop loss is 8%, which is 620. This is 8% below the blue line, okay? Below the blue line where I actually bought. And obviously my target would be reward to risk of 2:1. So my target will be 16% above the blue line, which is 782. So 782, and let us give it green color. So as you can see, this is my target. I bought the stock on 26th of April. 1, 2, 3. In 3 days, my target is achieved. And let us do some calculations here. Let us see how much return I have actually made. 16% return doesn't mean that it is 16% on the portfolio. It is 16% on the position. What I am interested is 16% of the portfolio. Now, before I discuss returns, let us first discuss how I managed the trade. Number one, why did not I sell on this day? This is 5% up closing, right? 5% closed above the previous day close, almost. The reason why I did not sell on this day is because the stock has closed above my yellow line and the blue line. So I am already in profit. Plus, the volume is already twice of average daily volume. The blue line here is the 50-day simple moving average of volume. So the volume is high. The price has broken out. It is not a fake out. It's a proper breakout. So why should I sell? Next day, the stock goes up even further, although it's a red candle, but if you closely observe, it's a bullish candle because this has a lower shadow. The longer the lower shadow, the more bullish it is. Now that there was not much volume here, but since the price closed above the previous day close and above the previous day high, I said, okay, this is still bullish. There is no reason to sell. And anyways, the price is above the orange line and the purple line. In fact, it is above all the moving averages. But technically, there is no reason to sell. The next day, it shot up 6.27%, which is like icing on the cake. That too with a rising window. This is not a gap. This is a rising window. There is a big difference between a gap and a rising window. The window is a concept from Japanese candlesticks terminologies. And the gap is a concept used by the Western traders. For a gap, the shadows of the candle could overlap. That is fine. But for a window, there should be a complete price vacuum between the high of this candle and the low of this candle. So this is called as a rising window. And as per Japanese candlesticks rules, if you know them properly, a rising window becomes a very strong support. So I could have added more shares here. I could have bought more shares. But since in my overall portfolio, my total portfolio risk was exceeding 5%, I did not do anything here. I just remained with my 3.25% position. So I did not sell. There is no reason to sell here. Basically, it's creating support. And next day, 8.8% rise in a single day, my target is achieved. This is today, by the way. This is my target was achieved. My automatic order was triggered. It was a GTT order, and the money came into the trading account. So this is how I executed the trade. It's all automatic. Once I place the market order, I automatically put the stop loss and target so that I don't have to micromanage the stock. So now let us look at the percentage. How much uh, money did I actually make on this? So I put 3.25% of my portfolio, did not sell a single share, multiplied by 16%, right? Because this distance is 16%, correct? So 3.25 multiplied by 16% is 0.52%. So this is the money that I actually made on my portfolio. So this is more than 0.5% of my portfolio in just 3 days, right? 1, 2, 3. This is amazing. Like 0.5% return in 3 days, that too on the overall portfolio. It's a fabulous return. Okay. So let me clear this. Okay. Now, similarly, you remember I posted some videos on which I made losses. So there were a couple of trades where my loss was 0.05. Another trade, there was a loss of 0.09. So all those two, three losses got compensated by this single trade because I am making 10 times more money here than the losses that I booked there. So a, a trade on which I had booked 0.05% loss, and on here I am booking 0.5% profit. This is 10 times the loss, right? So this trade allows me to finance more and more trades. So that is why it is important to book profits here. So this target was achieved in 3 days, or if you include the breakout day, that is 4 days. I made another video which is MOIL. As you can see here, my target was achieved here in 1, 2, 3. This stock was even better, right? So I bought on the blue line here. This was my yellow line where I planned to buy the stock. 1, 2, 3. 3 days, 16% target achieved. Here in KFin, in 4 days, target achieved. Another stock which was I sold early without hitting the target, that has achieved the target today. Let me show you that stock. This was Geojit. I have made a video on this. So I bought the stock as it came out here. I sold on this red candle. But as you can see, today what happened, it created a rising window. This was my target. But as I had sold here to compensate for the losses that I had made on other trades. Actually, I should not have sold there. If I had not sold the stock there, this stock too would have gone up and achieved my target. And look at these three trades, 0.1, 0.2, 0.3, 0.4 breakout. Then KFin also, 4 points breakout, 0.1, 0.2, 0.3, 0.4 breakout. MOIL also, 0.1, 0.2, 0.3, 0.4 breakout. So same strategy, same everything. I'm not doing anything different on all the stocks that I have shown you. The blue line is above the green line and the green is above the red line. So the moving averages are in place. The base is properly in place. The stocks are contracting. The volume is contracting. The stock breaks out on high volume. Within 3-4 days, it shoots up 16% to hit my target. So this was today's trade. And there are more trades I want to show you, but let them finish. Once those trades are completed, only then I will come and share with you the whole story, because every trade is like a story. I might sell half of the stock, I might keep the stock, right? I might add to the position. So every trade is like a story, and I want to tell that story, but I want the trade to completely finish. I want to be completely out of the position before I come and discuss here. Okay. So if you have any questions on this, just let me know. Thank you so much. Write in the comment section. Thank you so much.